Dividends are one of the ultimate ways to make passive income. If you own dividend stocks, these companies will pay out a portion of their earnings directly to you just for owning their stock. In today's video, we're going to discuss the ins and outs of creating a dividend portfolio. And by the end of the video, you'll be able to go out and start your own dividend portfolio right away, so that way you can start making money on a regular basis from dividends that are being paid to you by these companies. While I was doing some research before hitting the record button here, I came across just an amazing stat that I had to share with you guys. It's about Warren Buffett. In 2018, Warren Buffett's Berkshire Hathaway collected $3.8 billion in dividend income. And that's just such an amazing number and a really cool stat. If that doesn't get you excited about dividends, I really don't know what will. One of the best things about a dividend portfolio from my perspective is that every month you get regular payments from these companies. And you could set up those payments to be reinvested, so that way it grows your overall portfolio and it grows your dividend payment that you receive on a monthly basis. And here's something that I find to be fascinating. A 2016 study showed that 81% of the total return of the S&P 500 going all the way back to 1960 is attributed to reinvested dividends. So investing in dividend stocks and reinvesting those dividend payments can be a really great way to get substantial returns over a long period of time. And here's why you need to get started today. Let's say that there are two brothers, Timmy and Tommy. Timmy invests $1,000 in dividend stocks today. 10 years from now, his portfolio of dividend stocks will be worth around $2,000. And Timmy's brother Tommy, he decides that instead of investing his $1,000, he's gonna take that $1,000 and go on a road trip. And after 5 years, he takes $1,000 that he made from selling brake pads and he goes and invests in dividend stocks. So then another 5 years goes by and Tommy's portfolio is only worth $1,400, whereas Timmy's portfolio is worth $2,000 because he invested 5 years earlier. And let's tack on another 10 years and see what that does to their overall returns. Timmy, his account will be worth around $4,000, while Tommy's account is only going to be worth around $2,800. So you can see here, starting early makes a huge difference in the long run. That's why I want you to start today if you have not already. If you like investing, stocks, personal finance, I make 2 videos a week on these topics. So gently press the subscribe button and tap the notification bell, and you'll be alerted to whenever I have new videos that come out on these topics. To get started here, you're gonna need a brokerage account. Both Robinhood and Webull are good options for a brokerage account for a dividend stock portfolio. They both have free trading, so you're not paying for any trades. And I like Robinhood just a little bit better here because Robinhood has the ability to automatically reinvest your dividends, which I think is really important. And Webull doesn't have that functionality just yet. And if you open up a Robinhood account and put some money in it, you'll get 1 free stock from Robinhood. And if you open up a Webull account, you'll get 2 free stocks from Webull. I don't know about you, but free is my favorite price. So I would take advantage of those offers if you don't have an account at either of those brokerages. Once you have your brokerage account all set up, now it's about how much you're going to start with, how frequently you're going to add to the portfolio, and which stocks you're going to invest in. My opinion is the amount that you start with doesn't really matter. It's more about just starting. You could start with $100, $1,000, $10,000. It doesn't matter as long as you start. And then once you're started, you could focus on adding a portion of your income to this portfolio every month. And that's what I would really suggest here is marking your calendar for a specific date each month where you're going to take some amount of money and invest it into your dividend portfolio, whether it's in the same stocks that you currently have or expanding out to new stocks that you don't currently own. But making that regular monthly investment is really important. It's not about timing the market, it's just making a regular monthly investment. And that in the long run will serve you really well. Okay, now on to finding the right stocks for you to include in your portfolio. I would recommend 5 to 10 stocks at most when you're first starting out here with your dividend portfolio. You'll be able to expand this later on, but starting with just 5 to 10 stocks, and probably just 5, is really a good way to keep it simple and get started. In order to find these 5 to 10 stocks to start out with, I would recommend putting together a wish list of the characteristics of the perfect dividend stock. Let's think about what the perfect dividend stock looks like. You can make your own list, but here's mine. And if you put together your own wish list, or if you have some thoughts on characteristics of a perfect dividend stock, let me know in the comments. Let me know what your thoughts are in terms of the characteristics of a perfect dividend stock. Okay, my wish list. You want a company that's growing revenues every year, right? Cool, me too. Let's add it to the wish list. You want a company that's going to hold up to their end of the bargain and continue to make these dividend payments for many, many years to come. That's at least what I want. Add it to the list. And getting a raise every year would be nice, right? I think so. Let's add that one to the list as well. I don't know about you, but I don't like overpaying for anything. I like deals. So on my wish list, I'm going to add that the company needs to be on sale. I go into a lot more detail on the specific characteristics that I look for in dividend stocks in another video. I'll drop a link in the comments, but this wish list that we just put together really captures the high-level thought behind those ideal characteristics that I look for. And then you could take the wish list that we put together, or the wish list that you put together on your own, and go to a website like finviz.com or dividend.com. On finviz.com, they have a screener where you can start to sort stocks to search for the specific attributes that you're looking for. And once you find the 5 to 10 stocks that you're looking for that meet these criteria, I recommend taking the initial investment that you're going to make and splitting it evenly across each of the stocks. So let's say that you're starting your account with $100 and you found 5 stocks that meet all of the characteristics that we laid out in the wish list. You'll take the $100 and spread it evenly across each of the 5 stocks, so $20 to each of the 5 stocks. Okay, cool. Now you have a dividend portfolio. That's awesome. The next thing that you need to do is really important. You need to make sure that you have DRIP set up, Dividend Reinvestment Program. And what this means is that your dividends will be automatically reinvested into buying more shares of the stock. And this is great. It automatically enables us to grow the number of shares that we own of the stock and grow our dividend payment. If you're on Robinhood, go onto your account settings and make sure that it looks just like this. And if it doesn't say enabled right here, press Edit Dividend Reinvestment and make sure to turn that on. And here's the boring part. Now we just wait. We wait to get our dividend payments. We wait for those dividends to be reinvested. And we also focus on adding to our portfolio. As I mentioned early on in the video, you're going to want to pick a set day each month. Let's say it's the 3rd Wednesday of every month, where you add a set amount of money to your portfolio. And this can be buying new stocks or adding to the stocks that you already own, or a combination of both. Whichever of those you pick doesn't really matter, as long as you're adding to your portfolio regularly. And a great way to buy those stocks is to set limit orders for the price that you want to pay for that stock, and wait for the stock price to come to you so you're not overpaying for it. And a more advanced approach would be using a put option selling strategy where you get paid to wait for the stock price to come down, and then you can buy the stock at that lower price point. Check out my next video here where I go into more detail on how to sell put options to buy stocks at lower prices and get paid while you're waiting to do so. All right, see you in that next video.